Good morning, everyone. Welcome to this rundown for global stocks and commodities for the 3rd of September. I've titled this edition The Bears Get Slaughtered because that's pretty much what happened last week. Over the last few weeks, and I guess it's because of the time of year, August, September, which tends to be fairly wobbly in the markets normally, the calls for market tops have reached a new crescendo, and people that are listening to that sort of stuff are getting hurt if they're taking short positions. They're certainly getting burnt. But if you're holding back and you're not using your capital productively, then you're also getting hurt because you're leaving profit that you could be making on the table. So let's take a look at what happened last week. And I must admit, leading into a long American weekend, I think the market was entitled to have a bit of a sell down on Friday afternoon in America. That didn't happen, and that's an extremely positive indication, I believe. So in this update, it was a strong week when no one expected it, and not even me. And I'm, fairly bullish on the market for all the reasons that I've been talking about now for 2 or 3 years. But even I thought there'd be a bit of a sell-off on the weekend. So I want to look at what the price action is telling us because that's what's king at the end of the day. It's not what you think. It's not what someone predicts. It's what the price action is telling us. So I want to look at global stock indices. I want to look at the Nasdaq in particular, which was very strong. US dollar critical, precious metals really interesting, and of course copper as well had a very good week. So let's get into it. Just some general thoughts. The bullish sentiment is declining. It got worse during the week, and the bearish sentiment is rising, which really goes completely against the price action. But while you've got those sentiment factors in place, you can forget a top. It's just not going to happen. It just isn't. And in fact, the sort of sentiment readings that we're getting are more like a market low and not like a market top. So I'm very relaxed about the market action at the moment. When we look at global indices, they're responding to economic growth, a synchronized economic growth around the world, and also really solid corporate earnings in not only America but in Germany, and a lot of China is just rocketing along in terms of their corporate earnings growth. So this is a great environment for stocks, and my view is it's no wonder that prices are going up because that's what they should be doing. Really important, those of you that have been either with me as members for a number of years or have been watching these videos for a number of years will have seen this sentiment before, and that's trade what you see and not what you think or what some guru predicts. Now, I know it's really easy to fall into that trap of trading what you think should happen or what some so-called expert is predicting, but it never works. The more that you can just trade what you see, the better off you are. Because these gurus, they're simply guessing. They're often just trying to grab a headline. So, don't do it. American stocks, the underlying strength remains very impressive. All the indices finished the week in very good fashion, as we'll see. The Nasdaq, that new all-time highs, very impressive. The US dollar, which is obviously critical for everything, not only stocks but bonds and international trade and currencies. So has the downtrend reversed? Not sure, but a few green shoots there. The S&P 500 index just kept grinding higher, and 32 points is a fair bit. That's a good week. That's a good strong week, and opportunities abound in America. Members will know that we're just having a great time in America, and the candy store is well and truly open. There's just so many sectors now that are pushing ahead, and we're recording excellent gains. So let's take a look at America. We'll look at the global picture as well. So there's the S&P, 1, 2, 3, 4 days higher. Came off a little bit of a nervousness earlier in the week, but you can see that we closed at 1276, and the previous high close was 1281, so we're only 5 points below the all-time closing high. So the market remains exceedingly bullish. If we look at the DAX index, there's the German DAX, has had a bit of a dip. That's largely about uh, strength in the euro, which can impact corporate earnings a little bit. So it's down a bit, but it's also just taking a breather. It had a really strong run from 10,000 up to 13,000, and it's stacked on 30%. So we've now done a 10% pullback. So with 3 steps forward, 1 step back, that's all fine by me. This is the FTSE index. Also, just a tick off all-time highs. It's been consolidating now for some time, since about May, but not showing any sign of going down yet either. Now turning to the Nasdaq. Okay, so this is the chart of QQQ, which is the ETF that covers the Nasdaq, and we'll look at the Nasdaq index as well. So this was the chart that I had up last week, and yes, we had a little bit of a change of character last week. We had a couple of large down candles, and I noted that the possible outcomes were we get a reaccumulation range. So we get a range up here, which is reaccumulation before the next run higher. Secondly, we might get a breakdown into a new bear phase. Or thirdly, that we just get a bit bigger consolidation down to near the 200-day moving average, somewhere down around here, maybe around 134, down from 140, well, it was about 142 at the time. Now, clearly, this is now a new all-time high, which is even clearer on the Nasdaq index itself. So it's looking very positive to me, and you can see the volume wasn't anything particularly startling last week, but then the end of the week would have been pretty soft anyway, leading into a long weekend. Let's look at the Nasdaq itself. So this is the Nasdaq on a weekly. We're still retaining, so we had a trend line running through here. We then saw an acceleration in the trend, and now we've moved away from it strongly again. So you can only look at that chart and say that is very, very bullish, and there's no signs of that declining at all. So very strong signs there. Let's look at the Russell 2000. And you can also see we did have some weakness. I posed the question, what would signal a breakdown of the pattern? I was not concerned by this break. I was a bit concerned by this break, but ultimately I was looking for a breakdown here of 1336 to reverse my approach to certainly the small cap end of the market, but possibly to the market as a whole. In the end, that didn't happen. We held that support, and we've moved back up very powerfully indeed. So 1410 against a high of 1450, we've regained more than half of that decline. So the Russell is also looking fine. So I'm pretty comfortable with the way things are looking. The US dollar. We did get a little overrun of this key support line. So an important support line, and we had another support down here at 89.5. We see a lot of this sort of action where you get a test of the support. It's pretty obvious. We get a little bit of an overrun, and what that's happening is it's computer algorithms that are running the stops. They know that a lot of traders have got stops just below these lows, and so they deliberately push the price down. They run the stops, they get a bit of a cascade, and then they reverse their position and pick it up on the way up. So we've had a little bit of a bounce. So Tuesday was good, Wednesday was good, Thursday a bit of a pause, Friday positive again. It's a little bit early to be definitive about it, but at least we're seeing a bit of stability in the US dollar. Just while we're here, we'll look at the Aussie dollar. So we're still trading in this range between 78 and 80 at the moment. Turning now to the Australian stocks, so 79.7 is where we finished. Bit of a combination of US dollar weakness and commodity prices. Base metals are up, precious metals are up, and iron ore has been trending up. So they're the positives. Now our index again underperformed the rest of the world. We were lower by 20. And we're really only rescued by the miners, the major miners, which you got to remember is a pretty volatile sector of the market. The banks really are a drag on our market, and yeah, it's just generally fairly hard going in Australia. Turning now to precious metals, gold shot higher by $35 on the week, which is really interesting because it had a strong night on Friday night when the US dollar went up. So very strong buying in gold, and we managed to hold above that key 1300 level and finished at 1327. So that important 1300 level was broken, but, and these are the buts, the futures market has had the fastest build-up of long contract positions in 16 months. That won't continue for too long without the trade reversing. It just doesn't work that way. Stocks are not responding as I would expect. Stocks are not as strong as the underlying metal. So that's a bit of a concern for me. The US dollar appears to be reversing, and if it were to go up from here, then that's going to put pressure on gold. Sentiment in general towards gold has just become too bullish. It's a huge contrarian trade, I believe. It's not one I'm prepared to take. I'm not prepared to short against the trend, but I wouldn't be buying either. Now, I do note that gold GLD holdings did rise sharply to 831 tons, which is I guess what you'd expect when gold's breaking through. So that's been a positive reversal and is one positive aspect. But precious metal stocks, they're better, but I'm still not enthused. And I must note that over the years since I've been trading gold stocks are normally right. They normally lead in both directions. They lead the metal in both directions. So this, gold stocks are going up. Don't get me wrong, but it just doesn't feel sustainable to me. So I don't want to be buying gold stocks at the moment. So let's take a look at gold and silver. So we'll look at silver first of all. So this is silver on a daily chart. You can see we've had a nice trend up here from around 1550, and now we've got up to 1776. So it's been a nice move back up in silver. This is gold on a weekly chart. The down that big downtrend line is the big downtrend from 2011 peak, just short of $2,000 an ounce, and we've broken that. You can see 3 or 4 weeks ago we've been able to sustain that. We've got above 1300 and we closed on the highs. So from a weekly chart, that's looking very positive. There will be resistance up here around 1370, 1375. Let's zero in a little bit more on the daily. And you can see we did manage to break that triple top at 1300. And it's been a very positive break. So we had a strong move out. A bit of an intraday reversal, an indecision day, and then 2 more strong days, which go against what the US dollar has done. So there's a really strong indication there. So if you're just looking at the precious metals, you'd be entitled to be getting pretty bullish around gold. And that still may be the right trade. But what bothers me is this, GDX, I should say. So this is the weekly chart that I've been highlighting now for a number of weeks. And yes, it wasn't a bad week, but I just would have expected gold stocks to do better than this. I would have thought maybe up around 26 and a half was more appropriate to go with that key break of 1300 resistance in gold. It just doesn't feel enough for me, and the volume is not particularly elevated. So it just doesn't quite feel right. So this is what I've recorded a number of weeks ago. This is what we need to see to get bullish on gold stocks. We need to see a run up to resistance, which is up here. We need to see that on rising volume. We're not getting rising volume, or not yet anyway. The candle range expanding. Well, yes, the last week the candle range did expand, so that's one tick. A shallow pullback from resistance on low volume. Well, we haven't got there yet, so we don't have that, and we don't have a breakout on higher volume. So we've only got one tick, and it's only one candle. So the jury's still out on precious metals for me. Turning now to other commodities, copper moved higher, strongly higher to 309, and that's responding to both currency and also to global growth. Just consider, how long has the story about the China hard landing been around? I mean, people have been calling a hard landing for China since 2012-13, and it hasn't happened, and there's no sign of it happening. I think the Chinese government, I think, is doing a pretty good job of managing what is a phenomenal transition from an export-orientated economy to a services economy and to a domestic consumption economy. I just think they're doing a great job. And if you look at the financial results of Alibaba and Baidu and Tencent, these major companies in China, the growth rates are just phenomenal in earnings. So I'm not buying into the China hard landing story at all. So ignore the predictors because they're only going to cost you a lot of money. West Texas Intermediate was down a bit. Hurricane Harvey was certainly a negative factor because it shut down a lot of the refining capacity in Texas, and so that caused inventory levels to rise. So that wasn't particularly good. And I think crude oil is heading lower, and I think that's the path of least resistance, at least in the short term anyway. Energy stocks did bounce though. They had a pretty good night Friday night, so that is inconsistent with with the direction of oil. So not enough information there as yet. So there's a spot copper chart. You can see we've moved up very strongly from 260 to 310. Crude, we did get down to 46 in the immediate aftermath of Hurricane Harvey, but rebounded a dollar or so. So to wrap it all up, how to play periods of uncertainty, particularly now. Don't listen to the stories. Just overwhelmingly let the price action be your guide. And I think what you've just seen is a lot of extremely positive price charts. So that's what you should go with. Now, as you know, Portfolio Analyst, which is a new service launch for the benefit of those that don't want a full service membership, but want something else, launched last week, and there were quite a number of recommendations. And whilst there was only a couple of trading sessions that followed the release of that first session, the recommendations did pretty well. There was a trade on an Aussie stock that's been a favourite of mine for a number of years. It's a short-term trade off support, and it moved up quite nicely. So that was a pleasing start. There's an emerging market telecom major, which I made a strong long-term buy. I think there's a lot of upside in this stock over time, and that one hasn't moved anywhere yet in those couple of days, but I think there's a lot of potential in there. There's a China technology stock, which is a strong buy with enormous upside long-term, and probably quite a lot of upside short-term, and it's absolutely primed to break out in the very, very near future. There's another technology major in China. It's not quite at the price that I would prefer, but I strongly suggest a bit of a nibble now and add more if the price comes down. And finally, there's a very good emerging copper stock that I think is set over the next few years to become a global major copper producer, and it's a strong long-term buy now. So that's what came out of the first session for Portfolio Analyst. If if you'd like to join, then I think it's a terrific new service at an appealing price point. So hopefully you might come in and join us for a month or so and see what it's all about. That's it for this week. That's my contact details, and I'll be back with you next week. Cheers.